Taking a look at today's interest rate markets, let's look at the 10-year note futures once again today as they're moving higher. 10-year note futures higher for a fifth consecutive session now, and today's price action has us over the 109 handle, currently trading at 109.01 off the intraday highs, but still holding on to a gain above this 109 handle today, and this is a 1-month high for the futures price action. And looking at some of the driving factors today, I think there's a couple things influencing the markets. Now, early in the session, we did see some strength. I think that was attributed to some of the data points coming out from a global perspective overnight, as far as data coming out of the European region. And also, as we kicked off this morning, there wasn't any major U.S. data really to influence the markets today, but I think that you continue to see the digestion of some of the data the last couple of sessions, as well as we are seeing slowing in manufacturing as well as service sectors. And I think that that's helping to maintain some upward price trajectory when you look at the price action, particularly on the back end of the curve. Couple that with a bond auction today, or note auction. 3-year notes auctioned off today, 58 billion, I believe, and there was a very strong demand for those for those notes. And the auction results are viewed as a very positive result today. International demand coming in very strong, and I think that that's a catalyst as to why we're seeing yields under a little pressure here today, and prices holding up for a fifth consecutive session. Now, looking at the yields today, 10-year yield is down 3 basis points today to 446 basis points. Now, an intraday low is actually below 442 basis points. So we are, as I mentioned, coming off those lows, some selling pressure in the treasuries and leading to yields coming off of those lows, but still holding at basically 1-month lows here, even at the 446 level. And when you look at the yield curve, it is interesting. We are seeing that inversion continue to widen once again today. So the short end of the curve is holding up. You're seeing the 1s, 2s, 3s basically selling off a little bit today. And then you see a pendulum in the middle as we get to the back end of the curve, buying pressure, keeping those yields moving lower here in the case of the 10-year for the fifth consecutive session. But we did have some Fed discussions this morning. One of the Fed officials pushing back on the idea that rate cuts will be coming imminently, as he's still evaluating the data points. And maybe that's what's holding up the shorter end of the curve right now, as opposed to the back end, which was interpreting maybe some of the data points more so. But when you look at the inversion today, it is widening out once again today. It's the second day in a row we're seeing that unfold. And nonetheless, those 10-year notes continue to maintain upward trajectory, and this is a fifth consecutive move higher for today. And again, trading back over that 109 handle.